And this is textbook CTM. By the way, it is only on crypto that we take breakouts during the bull market phase. In every other market, we're looking for a breakout, retest, resumption. Here's a perfect example of how this occurs on the NASDAQ and does not occur on the S&P. So we'll look at both of them. Here you can see once price breaks above the trend line, it comes in for that retest and then the resumption off. That's conquering the markets all day long. And this was a good one over here. What type of correction do we see from wave 2? So let's talk about this in real time in a couple of different ways. I'm trying to look for a model of wave 2 to do that, right? So wave 2, two observations. If you look at this on the 3-day, which we'll do afterwards, you will see that the correction of wave 2 in the previous 2 cycles is very short-lived. So by the way, very important, like turn your ears on. That's something that was going to lead us, if that plays out again, to see, okay, that's one checkbox that actually everything is setting up for liftoff. Because at the end of the day, we don't know. I mean, wave 2, which we said coming out of the correction of wave 1, wave 2 is not the single most important thing for us to know whether we're right or we're wrong, right? And if we're wrong, it means that we just adapt as the earliest possible time. So, wave 2 so far, it's about halfway through. It looks good. Everything's on time. Feel good about that. So we're now, rightly so, Chai and other people are looking for, what about the correction of wave 2, right? So in terms of percent drawdown, I'm not sure. We'll look at that in a second. But my observations are both of these. You see the V, right? You see the V. You see the V. The price action and the angle coming in. It comes out just as, if we want to see that to have the first indication that we're seeing liftoff, right? Now you could take a horizontal line if you get above it, because for some people, this is the last prescription Zen. You got to go to do advanced Twitter search. You got to put in Alan Au's Twitter handle, and then you got to pull up, use GBTC as the keyword. He's done extensive PhD, beyond PhD research for sure. That's where you want to go. That's the resource where you want to look. So hold on, Fabio, just asking, when's a good time to borrow against your Bitcoin on the way up in this cycle? And why this is something that I'm definitely not giving you advice about. I could share my opinion with you, but you should not do something like borrow against Bitcoin or anything like that, unless, first of all, you have an income coming in that could go ahead and make sure you meet those payments, and or also that you also have the collateral aside ahead of time in case something goes wrong. Because at the end of the day, if you lose your Bitcoin, then you did this terribly wrong. But there's no way at this particular point of cycle to be borrowing against Bitcoin. The next time that you could borrow against Bitcoin, in my opinion, right? Let me go ahead and pull up a chart that we could actually work off of. That will be this one right here. The next time, in my opinion, that you're going to look to borrow of Bitcoin is going to be after the bear market low during the accumulation stage. That's going to be the next time that you look to borrow against Bitcoin. And then the breakout, the last line of repair, this is the one that we lined up so well together. When the bull market begins, that's also a potential time to look to borrow against Bitcoin. But up here, no, I don't think so. And Fabio, there's nothing wrong. Do not be in a rush. Be in a rush to get it right. And for many people in here, and some of the sharpest and brightest, they've spent these past 6 months and or longer just working on developing their skills, preparing for the next cycle. And the odds that they get it right are going to be pretty strong. And we want everyone in that camp, right? So there was another question over here. When do you think we will have clarity if the end of the cycle will be in the end of 2021? So a couple of things we're still waiting for Alan Au's 60-day signal, right? Which is not triggered yet, right? So we're waiting for that one, and that should happen before liftoff, because liftoff is approximately 34 days before cycle peak, at least from the previous 2 cycles. So we're looking first for that Alan Au signal, then we're waiting for liftoff, and that's the earliest possibility that, you know, if liftoff plays out exactly as we just looked at, right? Whether or not we're looking at, if we see the V, that's a good sign that we are getting ready to enter into that blow off top. Then the horizontal line, the break of that, like, and then this is where Ian's line comes in, where he's like, listen, you're not going to miss it. It's going to be very obvious, and you're going to know that we're in the parabolic phase of the session. So if the earliest that could happen, though, is in November, right? So that's why I've always said, right now, all I can do is continue to hold on to our thesis as being the most probable, because it's lining up and continues to line up like perfectly. Now, it doesn't mean that's going to continue, but until this area, until November, and I kept saying November, sometime in the middle of November, would be the earliest that we could pivot from an end of the year cycle peak, right? Because the market would have to show us otherwise. And that's the beauty of having the awareness we have and having the model that we have, because then we know when something is not right. And that happened before this very year. That happened. Remember we were talking about, watch out for the shakeout, watch out for the shakeout, watch out. And then the shakeout came. This was a 30% drawdown. And then as we resumed out of it, I thought that was it. Like right here, as we made the repair, I was like, okay, now begins like the move into the cycle peak. And that's wave one, and then wave two, and then the blow off top. And then when price came down here, May 13th, right? And May 14th, that's when I said, wait, you know, this is not right. I don't know what's going on. The only time I've ever said that on this channel, I don't know what's going on, get neutral. Like the model is showing us something is not right, because that's not a V, right? And if something like that were to happen at liftoff and you saw like price come up and then come back, that's not right. That's not supposed to happen. You need to, at this point, be overprotective and cautious. And, you know, while I wasn't looking for a dump to happen the following day or anything like that at all as we knew is this was not right. And that's the beauty of the foresight we have and the model that we use. I know, James, I mean, the thing that you have to watch out for and about borrowing this part of cycle is that, you know, you're going to get a margin call on the way down. So that's why you have to think it through ahead of time. You have to make sure that you have the collateral to go ahead and post afterwards. And from my opinion, who is like, it's so funny because like, you know, it's kind of like a paradox, you know, I'm so aggressive, but I'm so conservative, right? But listen, I want to borrow when my risk is the least, right? And that's why it's these two over here. And yeah, and even borrowing, right? Whether or not you're choosing to borrow because you want some type of expense or you're looking to borrow to buy more Bitcoin, borrowing up here, I don't know. I mean, it seems risky to me. That's not the way that I would play it for sure. Oof, that Mark, see, I wasn't thinking about that. And listen, it's a huge unknown. Oh, also very interesting to note for all of us, right? I'll come back to that in a second, Mark. That's great insight. Look, the Fed tapered in January 2014. The market peaked a month earlier. So I can't say there's a direct correlation there. You know, I can't because the Fed tapers in January. Here we are. Oh, on the Willy Woo bounce over here. This is where the Fed begins tapering. The market top was already in. That's the normal structure of that blow off top and bear market. So I wouldn't say that the two are too affected. It's something that like we're paying attention till today so that like as it begins happening in real time, we're not caught off guard, right? And whether or not it's something for us to be worried about, I'm not sure. Actually, I think that, you know, probably the most important factor in there was Matt's 10-year coming back into that mid place of the channel. And it's headed in that direction right now. So that's interesting. But regardless, this insight is really good, Mark. And, you know, we talk about taking on that extra risk. Is it worth it? And it's something to consider when you're talking about it was a 2.5x potential on Ethereum last time. And Ethereum we know is like the conservative play because on, you know, something like, let's just say Cardano, which was like a 6 or 7x or XRP, there's a potential in there for a big play. How much? The problem is people or traders are notorious after making some of their best trade of their life, some of the best gains that they can make is being more apt to take on risk and usually follow that up with a bad trade. The money that you earned is so earned, it's ridiculous. The time, the energy, the spent in making sure that you execute properly, that's earned money. You do not want to give it back to take a risk that might be a bad one, and that's why we'll look at it, and we'll look at it closely so people have the most data. Jordan, do we see an upcoming mania phase when we hit liftoff, showing even more speculation, memes, FOMO being bigger than the first part of January into May, right? So, by the way, and I don't know if this is accurate, you all know that I always do things kind of like rough sketches, right? When I kept saying this cycle is an average of the previous two to the upside, to the downside, that's rough sketches. Then Mile comes in and he actually, gets down to detail, and it turns out to be almost like perfectly true, right? So it's rough sketches. When I call mid-cycle, what I mean by is percent gain coming off the halving. And, whether or not that's true, I'll just go ahead and just go like this really quick to tell you, right? So first we looked at a 600% gain, and then you look from, that's going to be, hey, it's about the same, right? So mid-cycle doesn't have to do with time. For me, it's always had to do with percent gain, and it's right there about on time. So we always, is it somewhere where it could be close? Let's just do that again, just to get an idea, right? Oh, these two cycles are pretty close, aren't they? So where would a 550, 600% gain put us? Yeah, somewhere around $200,000 Bitcoin, let's call it, maybe less. I hope it's not. I'll be disappointed if we see something like, diminishing returns, and that's 160,000 is diminishing returns. 180,000 is diminishing returns for sure. Getting above 200, 210 is when you could no longer make the case that this cycle saw diminishing returns. And yeah, it puts us right into our range, and our range is big. There's no question our range is pretty. Now, our sweet spot is definitely between the yellow and the red, right? And do I think that's where we end up? Well, I do, right? But, we have some variance over here. And listen, from when we did this, trying to shoot the arrow, that far away, it's a pretty good, it's the best we could do, the most accurate we could do. I am looking to take a position out of liftoff. If that all aligns, I am looking to add to my position of liftoff. Now, Miles was very great about highlighting in the past two cycles, as price made the new all-time high, is that we've saw price come back and retest that, right? So could that potentially happen before the peak of wave 2 into liftoff? Yes, it could. Is that something that is a better entry if we deem that this is not the peak of wave 2 and you see price make a new all-time high and retest that area? Now, whether or not it's up here or it's even down lower over here, we don't know. It could very well, hold on one second. Let me get this accurate with you. It could very well be right here, right? Actually, where price is right now. This could very well be where we break to the new all-time high and come in and retest. As we come in for the retest, it'll be pretty important indication of where we deem, for as accurate as we could get ahead of time, of where that potential bear market low will be, right? So we don't know if it's going to be up here, or we don't know if it's going to be down here a little bit lower, right where I drew that line. But if we get a break to new all-time highs and a retest, that potentially gives a better entry than waiting for the correction of wave 2 and into liftoff. So that's that. I mean, look, in real time as it's happening, we could take a look at it. We don't know what it's going to look like, but this is what we're watching for. And then the other thing is, of course, is if we get wave 2 right and the correction out of it is the next and last entry that I think are good high probability entries. So this is a great question. And as always, so many from so many sides.